today to talk about a little market breakdown in the Forex currency cross, US dollar, Swiss franc. Now, if anyone is not aware of what's been going on in that market, it's been under pressure for the past few weeks, and it ended this week with Friday's trading banging new lows. So, before we get into that, let's first take care of some necessary business. I'd like to show you the disclaimer. This just shows that we are talking to you today for illustrative purposes about the US dollar, Swiss franc, and that is all it is for, just for educational and informative purposes. So it's just a typical disclaimer. Take a look at that, and you can look at it again in the video after it's been finished today. So our first live slide here for today is a current chart of how the US dollar Swiss had ended on Friday. Now, as you can see, it was quite a down move. It basically took out the last weeks of market action, and now it is lower. So pressing new move lows, and as far as how the trend dynamics go, we've had another lower move low and a higher move high, which the market fell off of from a couple days ago, and now has made another newer move low. So now this market is under pressure, and it has been breaking now for the past month and a half. So this could be an overzealous sell-off because of dollar-driven news, and may be pretty much the extent of this slide. Or this could be the beginning of yet another major wave lower. So let's take a look at what happened and where it's at, and what we can probably discern from where it may be going from the previous market action. So as you can see, we have the four yellow line key pivot points. Now, the one, which is just above where it closed, is at just above parity. And the one just above where it or below where it closed, inside that big ellipse, is at 99.82. So that little trading range most likely where you'll have the bulk of trading beginning on Sunday's evening trade. Now, it's very possible after a sell-off like this that the market could open much lower, below parity, towards that lower pivot of 99 cents. Now, if it does, you be careful selling into a move like that if you're not already involved, because it's a very possible chance that if the market opens lower like that, initially that's followed through from Friday's overzealous sell-off, and then you'll probably see a corrective bounce, at least for the short term during the morning hours and the morning session, which might bring it above the close of Friday and make it slightly positive on the day, which would only be most likely a profit-taking bounce. I would think that a move like this is going to sustain more of a support testing mode over the next few sessions. Now, you look at that ellipse, that's pretty much the trading range, the target trading range that we're looking to happen over the next week and a half or so. Now, the key thing is that Friday's close, if you look at that bar, it settled below that rising blue support line. Now, that is a critical support line from the monthly and weekly charts. And the US dollar Swiss has been in a bull market, and for the most part over the past month and a half, even though it's in a bear trend, it's more of a corrective phase, because the Swiss dollar cross rate had stayed above parity for quite some time, which is the first time it has in a while. So it's showing a lot of strength. So this little weakness that's occurred over the past month and a half probably has been looked at by most as just a corrective slide. Now, with US dollar influences in play with the tariff wars between the US and China, and now the US and Mexico, and however else it may be impacting the global markets, the US dollar is definitely under a little bit of pressure. So that could be aiding this slide in the US dollar Swiss, but that is not the major. It's one of the forces, but not the only force driving it, and definitely not necessarily the major force. The stability in the EU is with the Brexit move, and also with the EU numbers. That's also implicating some of the strength and weakness that happens now in the US dollar Swiss trade. So back to that blue critical support line. That's been holding up the market. You can see how it bounced off of that originally, and now it's closed below that. So that being said, it's very likely, like we said, we're going to look for a test of that 99.82 pivot area. That might be where you see a bottoming, and probably, like I said, where you'll see a profit-taking bounce. Trading below there, especially if the market settles underneath there over the next session or two, then it would be very likely that the slide is not just for real. Obviously, it is for real at that point. It already is, but will most likely press on to really hit the support down to the 99.28 level, at which point that's an extreme slide. This is a slope going right now. If you look at the other blue line, it's slanting down. It's a pretty steep slope. And if it was to get down to that 98 cent level, especially over the next few sessions, then you're really looking at most likely where it's going to start to gravitate back up towards that 99 cent level and towards that blue descending resistance line. So that being said, short term, look for a potential breakdown into that area. Now, one of the key things to watch out though is that if we do get a bounce over the next couple sessions, especially around that 99.82 level, and then it bounces back above parity and can get above that upward sloping blue line, that would be an indication that this bearish correction is a bearish correction, and most likely you're going to start to see a neutral to higher range trades be established over the next couple of weeks. And that would put the key resistant pivot point there at just above parity at was it $1.0098. That would be probably where you're going to see a challenge of that, or close to it. Now, if the market fails to hit that area and stays in the range trade, then I would definitely start to look at the range trade to lower potential for this market over the next few weeks. If it can stay above this blue rising support line and then get above, breach that upper pivot, that would be a sign of a newer move high, which would take us off of the bearish corrective phase. And then I would say at that point, whatever low is in place, whether it's Friday's low or if it does go lower into the next couple sessions, or especially Sunday into Monday, which I believe will happen, especially I think you might have the false trap where you're going to get stuck in the hole. I'd be very careful selling it down into a progressive move on Sunday night or early on Monday morning. So, and definitely be wary with your stops, and also be cautious because there are probably going to be a lot of weak shorts. So any type of spike that gets the market moving, especially if the algo starts swinging, if they get a rally to the upside, buying momentum, just for this fact of the stops that probably will be in there, you'll have a pop in the market, and that rally would be most likely not sustainable. It would just be a glitch, but it would be enough to make your day's trading, especially on the short side, very, very rough, as well as not be a sustainable move either, which would mean any longs are probably, if you're entering the market, you're going to get caught on the same way as it falls back and starts to pressure support. So that being said, look for those potential scenarios to unwind, and especially if there's very neutral news that comes out over the weekend, into Sunday. Right now it's Saturday. If we hear stuff that we have the G20 meeting coming up, and if things start to look in the right direction with the U.S.-China tariff talks, especially backing off of something, last week there was a lot of flexing of muscle on both sides, and now we have the whole Mexican-U.S. trade tariff thing that's also going to come into the mix, which will obviously affect the peso, which is a lesser of the currency cross rates out there, but it definitely is a big deal when it comes to trade with the United States. And this will also trickle down into the U.S. dollar Canada trade. You can expect to see some moves off of that if volatility starts to persist from that. And the main thing to remember is that the U.S. dollar, obviously the biggest currency, is always the major focus, especially when we're talking about a cross where it's like this, the dollar Swiss trade. And those variables are very important, and they definitely are a factor day to day, but a lot of it is already factored in. So a lot of the news that we're talking it's not fresh news, it's not breaking news. We know the tariff fight has been going on now for quite some time, and it definitely is not going to be resolved anytime in the short-term future. But hopefully in the short-term future there'll be some resolutions, especially with the G20 meeting coming up. And with that being said, the likelihood of a range trade establishing in that big ellipse that you're looking at in that target range is very possible. It could be where we're going to start to see, like I said, pressure those lows a little bit, come back and try and make a newer move high, and if it fails to, then you're probably going to see the market bobbling right above parity or just below parity for the next few weeks, as the market and the dollar starts to gain traction one way or the other, being compounding the effects of being a negative fight situation, which is going on now, or the opposite being where the dollar gets strength because of there's some sort of resolutions and backing down, or at least meeting of the minds between the U.S. and China, and also with the U.S. and Mexico. So these definitely are impacting where the Swiss dollar trade is going right now. And I would say that most likely Friday's sell-off is more indicative of weakness in the dollar than strength in the Swiss. So that is something to also take into account. The Swiss is definitely a strong currency, but right now I would say that the dollar is wagging the tail for this one for the most part on what happened over Friday, and especially going into what's going to happen into next week, because the Swiss was looking like it really wanted to already start establishing a range to higher trade, and that didn't happen obviously because you can see that on the chart. And you can see also that's an overzealous move you had in one day where you eroded a whole week's worth of work and market activity. So with that volatility coming up, and you have expiration in the futures contracts coming up also over the next couple of weeks, you expect to see a lot of choppiness, especially as the front month future, the June contract goes off the board and the September contract becomes the front month. So you also have option expiration and things like that. So I would say that a lot of your shorts, and especially depending on how the spread is in those futures contracts, that does impact what happens in the Forex market as well. So, and that being said, you're going to see a lot of intraday noise and jittery trading, where, especially like with what happened Friday. And I would say that's going to persist over the next week or two, and use caution whether you're trading from the long side or the short side. So, real quick, a recap: if you are bearish, then look for that 99.82 pivot level to be tested probably between Sunday night and Tuesday. Most likely, I think it's going to happen very quickly into Sunday, Monday. Probably get a bounce. If not, a failure from that level most likely is going to keep the bearish momentum sliding the market down towards that 99.28 pivot. At that point, most likely you're going to see some sort of retraction and a corrective move just to digest this recent market action, unless there is a reason for the dollar to be getting slammed. So if we have more compounded news like it happened last week, and we see the bargaining table starts to fall apart, then look out below. The bears are going to be most likely in control. Otherwise, look for a neutral to higher trade testing of that level at par 09. 0098 rather, and that would probably again be where you're going to see the market run out of gas and establish the range trade, and only a close above there, which would then set new or move highs, establishing a low, which would either be from Friday's low or sometime in the next couple of sessions before that rally would occur. And then that I would use as your basis of support moving forward, definitely moving into the summertime. It could be a big support level going and carrying through the rest of the summer, especially if the bulls can get this market back above the 101.16 or 101.80 level. And then you're looking at new move highs, which will probably take out those highs that were established back in April. And with that being said, good luck with all your trading endeavors. Definitely make sure you have a plan. We hope that you've gained some information for your Forex trading activities. And if you'd like the information here, you can always learn about more of what I look at in the markets. I use Japanese candlestick patterns, and I wrote a book that's on Amazon, available on Kindle and paperback. It's called High Probable Japanese Candlestick Patterns, and it's utilizing buy and sell patterns that have been used for over 400 years successfully in all types of agricultural and financial markets. And they're applicable for the Forex markets, the futures market, stock, options, and ETF, you name it. You can also use them for correlation trades, where you have signals in one market that you don't trade, but it impacts other markets that you do. Those are scenarios that we cover in the book if you're interested in that kind of thing and expanding your trading opportunities. So with that, you have a great Saturday, and like, follow, and share us. We always like to support, and we're trying to grow this channel so that we can improve the content and also have more regular scheduled content for the traders out there. With that, take care. Have a good day. Thank you.